So today is like we are on the last weekend on liquidity, and because after today and tomorrow we won't have any more topics on liquidity. So if you have any questions relating to liquidity, please can you ask your questions? Any questions relating to liquidity, can you please ask your questions so that we can get done and over with liquidity and move on to something else? Because from tomorrow, we are going to be treating SNR levels and trend lines. Then, yeah, I mean, from Monday, we are going to be treating SNR levels and trend lines from Monday. So that's what we are going to be treating. So that's from Monday. So for now, if you have any questions on liquidity, I'm just going to do a quick recap. Then if you have any questions on liquidity, you can always ask me. So from what we spoke about before, we spoke about market structure previously before liquidity, and they both go hand in hand. So market structure is already uptrend, downtrend, and we look at the breaks and shifts in structures, right? And we know, okay, we have, if price is bullish, like this, from here to here is a range, here to here is a range, right? So if price is bullish, trending up, your goal is to what? Catch the next higher lows. You focus on catching the higher lows. So how do you catch these higher lows? Is you look for what? Liquidity that sits within this range, right? Wait for those liquidity to get swept out. Once they're swept out, then you can what? Switch to looking for buys, right? You can switch to what? Looking for buys. So you could either take your buy by if the liquidity gets swept out and price give you an entry point below your liquidity, you could buy, or you could wait for what? Entry models to form after liquidity has been taken out. So we also have the bearish version as well. Same thing. This is a range. This is a range. So your goal would be what? Catching the lower highs. And to catch the lower highs, you have to what? Look for liquidities within this range has to get taken out. So price has to what? Give you entry model inside of this range, or you wait for the liquidity to get taken out, then price forms your entry model and you keep selling with the intention of what? Taking out this low again. So that's it for market structure. So that's literally what market structure entails. So let us go through few examples with liquidities, and then you guys can ask questions on whatever you feel like asking questions about. Okay, so now let's go. Let's go to the chart. So I'm going to clear my chart right now. I'm going to clear up the chart. Okay, so I'm going to clear up the chart. Now, so chart's cleared. So let's go to the daily time frame. So on the daily, or let's even use the weekly. On the weekly time frame, we're looking at what? Market structure. And as we say market structure, we can see the structure on the weekly. Price has a low, then a high, or then a lower high, then a higher, then a higher high, lower high, higher high, lower high, right? So this is our last lower high on the weekly time frame. Price give us our last lower high right here. So with this last lower high right here, right, this is the trend. The weekly time frame, we are trending bullish, right? So with the last lower high being here, what do you want us to look for? This becomes the range we have. This low, this high becomes our range, right? So if this is our range we have, what we are going to look out for now is what? Where are the liquidities that sit inside? Where are the liquidities that sit inside this area, right? Wait for price to take out those liquidities. Now, so this is how it works, right? So if this is your range, low and high, right? So if this is your range, price could have a liquidity inside the range. So up until this liquidity goes out, right? You don't buy, you should wait for the liquidity to go out before what you take your buys and you target this high. So this is how it works, right? So wait for liquidity to go out, you buy and target that high. So that's how it works. So you could have your entry straight off of here if you have the confluences to maybe price give you something like this, and then this became your liquidity, and you have a zone below your liquidity. So that's clean enough for you to take a straight buy. Or if you don't have it clean enough for you to take a straight buy, if it's not clean enough for you to take a straight buy, what you should do is what? Once liquidity is out, you should wait for what? Price to print you entry models on the way up. Then you use what? The micro time frames, smaller time frames to follow the entry models and keep on taking buys with the intention of what? Price taking out this liquidity, this high. And that's how you have your directional bias. So this was my bias for this week, how I was able to get my bias for the week. How I was able to get the bias for the week with just liquidity. So once I knew that this was my range, low and range high, so what I went to did next was go down to the lower time frame, like the daily. Now, on the daily time frame, what I could see here was that this was my liquidity inside my range. This one was my liquidity inside my range, inside the weekly range. Now, why is this my liquidity? Who can answer me on the question of why this is my liquidity? Who can answer that? Who can answer that? Why is this my liquidity? Anyone? 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 Let's see. Not really liquidity before breakup. The reason this is my liquidity is because price previously we were on a downtrend on the daily. If you watch this, it was a high, then price made a low, then price made a what? A lower high, right? Then price made a lower low, right? Then we had a break of structure. So had a break of structure from here. So after this break of structure, you can see here, after our break of structure, this was the first pullback. Yes, this was the first pullback. So if you saw this, right, you saw your liquidity here, right, you could take a straight up buy, you could take a straight buy. The reason you could take a straight buy is that you could take a straight buy if you can see the zone that price tapped into below your liquidity, you could take a straight buy. But at the same time, price was at the same time, price was rejecting a weekly zone, a weekly open close. So we were already inside an open close. Like I said to you guys before that, if price sometimes price could be inside a higher time frame level and just go like move more into that level just to clear out some liquidities on the lower time frame before moving. I think I've said this before. So that was what played out right here. We're already inside the weekly. Price moved deeper to what? Take out this liquidity on the daily. And after taking out this liquidity on the daily, what do you think price did? Tapped into something. I don't want to go into the lower time frame to look for what it tapped into, but tapped into something and left. Now, price left. So this was how I was able to get my bias for the week. Price tapped into something here. So now I knew that, okay, liquidity is out. Liquidity inside the range. Remember, the range is from here, this low to this high, the range of the weekly to this high, right? So liquidity has been swept inside our range. So if liquidity has been swept inside our range, all I just needed to do was what? If price gave me an entry model to take a straight off entry from here, I could. Or I wait for what? Lower time frames to print me the entry model while I buy, and my full targets, my bias, according to the bias, full targets is what? This high. right? So this is what I'll be looking out for. So now you know why I have a bullish bias on gold on Monday. So when that happened, all I just did was what? Go down to the smaller time frame. And what I looked out for was to see if I could get price to give me entry models. Price will give me entry models. Now, these were riskier entries because some bigger time frames haven't given me any shift, like the 1 hour 30 minutes. But I was taking my entry just simply based off the the 3 minute time frame. I took entries based off of 3 minutes time frame. Even when some other time frames that could better confirm the direction haven't given me a break to the entry, regardless of the 3 minutes. So this was more like a faster entry. This was more like a faster entry, right? So I took these entries off the 3 minute time frame. So where did I take my first entry from? Now you understand why I have a bullish bias, right? So first entry was from here. I saw this and it was what I had session confluence for this entry, session time frame, session confluence for the entry. So this was the first entry, price break structure, right? Then liquidity, first pullback. This was model one, right? Liquidity, inducement. So now the inducement already mitigated the what? The resistance break becomes support, right? Inducement already mitigated that. So because it was already mitigated, we can't use that anymore. So what do we use? Open close. Fresh one below liquidity. Open close. So this was my first buy entry. And we had London session confluence because that was London session as well. Okay. You can see that price tapped immediately, London open, price came for this entry. So this was everything. Session confluence also. So you can see the direction confluence and everything from top down, the weekly, right? Using liquidity now. So this is how you understand liquidity. So I bought here. This is liquidity for entry, right? While this is inducement liquidity for entry, while we're having our target liquidity at what? Here. But doesn't mean you're going to take one entry and hold it all the way till price get there. No, you can take multiple trades, multiple buy entries, but keep it in mind that here is what your ultimate goal, right? So you could take buy entries and target maybe the most obvious liquidity. Maybe you could even take your buy from here and then you could target this high, buy here, TP here, because this high made this low. That's like the most obvious TP, the safest TP you can use. You could use that. Right? So at the end of the day, just know that the goal is for price to get up there, right? And also, this the liquidity I marked here, the liquidity I marked here was also target liquidity for the sell. And since the target liquidity for sales was out, it was time to buy. This liquidity, this one, was also target liquidity for sales. Why do I say it's target liquidity for sales? Because if you look properly with the sell, there was a whole uptrend rising up, whole trend uptrend. So that was also like a trend line liquidity as well. So it was target liquidity for people who were in the sales. I think this would have been their major target, right? So you can go down to the what? Smaller time frame, like a 3 minute time frame. Okay, that's what we're analyzing. Yeah. So you could have your first entry. So this was my first entry. Second entry I took on this trade was here. When price gave me this break of structure from here, break structure. And the reason I took it because I've been saying something about I've been saying something to you guys concerning a double break of structure. I think I've said that a couple of times. So price kind of broke structure here as well as this one too at the same time. Then did a first pullback inside here. So when I saw this, it's my inducement structure. So my inducement, right? So my entry was off 5 minutes. I think 5 minutes support from there. I think that's why I took the entry. Okay, so the entry was off of the 5-minute support. Yeah. Both here and same targets all the way up, right? Now come again because this is the most powerful type of break of structure, right? This is the most powerful type of break of structure. If you see price does something like this, the most powerful type of break of structure is that when price breaks double structure, does this, let me say, does something like this, then break, right? So now in this case, price didn't just break only here. Price is giving us what? Breaking here and here. If price does something like this, pulls back inside with liquidity, right? I mean, no, this one. Goes back inside with liquidity and goes. Once price come back, get an entry from here and fly. Start clear. Okay, okay. No problems. So like that the most powerful type of break of structure. So I had the double break of structure from here when price broke this structure out from here for your S, as well as this structure too. So when this happens, price left us our liquidity, price pull back. Okay. Then we had this. So this is what our entry point. So as you can see the entry point here. So this was my third entry for the buys. Now all of this is what knowing that price is bullish. I could easily take all of these entries. Now when the bigger time frames such as the 30 minutes or the 1 hour finally did a shift in structure, when the bigger time frames 30 or 1 hour, okay, when the bigger time frames such as the 30 minutes, right, or 1 hour finally did a shift in structure, okay, when this one finally did a shift in structure by breaking out of here, I think now this was the setup we talked about that day. So this was this one, and then this one. Cancel. Price finally used what? Open close below the liquidity. Price used it and price started buying. So I didn't take this trade, I missed it. Right, but I saw the setup yet again. I saw the setup again. Right. I saw this one here where price broke double structures. Broke structure here. Right. Broke structure here. At the same time, broke structure here. Then pull back, first pull back, inducement. Now remember, our bias is bullish, remember. So this is our entry. This was the one I took, right? Now, can you hear me? So this was the entry. I took this entry again, and this was the second one. Same setup, break of structure and liquidity. Now, you could easily just mark only this break of structure here as your break of structure. But if you see break of structure whereby price pulls back like this and then moves aggressively, breaking both here and here aggressively, like, with nice bullish force or bearish force if it's a bearish case, right? This is very strong break of structure, very strong break of structure. Like the moment price prints inducement, just know it's definitely going to hold. So it was a very clean one for me to take, right? and then price left. So with this, right, one thing that price did after this was, if you look at the 1 hour time frame, let's go 1 hour time frame. On the 1 hour time frame, if you're looking at the 1 hour time frame, you could see that price broke structure from here. And it broke structure from here. And this was a compression. Okay. You know, with a compression liquidity or trend line liquidity, right? With the trend line liquidity or the compression liquidity, the best type of trend line liquidity is the one whereby price rejected 3 times minimum before breaking it. Right? Price reject 3 times minimum. That's the best one. So here you can see we have first rejection. Sorry. And see we have first rejection here, second rejection, third rejection, fourth rejection, fifth rejection before price broke. So here we had 5 rejections, right? 3 is enough. We had 5. So this shows that what it's a very strong liquidity, that the liquidity below this line are so strong. Shows that liquidity below this line are so strong. And I previously didn't notice this when I was analyzing. I previously didn't notice this because I was focused on what catching the buys, and I took this setup. I was focused on catching the buys, and I took this setup. This setup, I think this setup, just following the same thing. Whereby price break structure, leaves down liquidity from here, right? Leaves liquidity here. Then yeah, but as we all know, if liquidity is not out, like if we have liquidity below and you buy before liquidity is out, no matter how clean the setup is, it's going to fail. It's definitely going to fail. So we had our liquidities here, right? So there was absolutely no point or reason to buy. Instead, we should not look for sales, and we can see that here, if we looked for sales, price gave us what? Double structure break here, right? Let me just mark this alone. Broke both of them and gave us what? Liquidity. So this was a cleaner setup that would have been taken, but I was more focused on the buys, right? Because I didn't observe. I didn't observe. I was more focused on buying because I didn't observe, right? So this was it. And I was more focused on buying because I didn't observe this as of yet. So when price printed this buy, I took it and I was holding on to the buy, right? But once price turned around, I had to understand why. And when I understood that price turned around because what? We had liquidity sitting below this trend line. And also at the same time, I also saw this. So it made sense. Like when I saw that, okay, price broke here, and this was like a first pullback as well. So you can take buy below. It made sense. So this is like everything is structured around liquidity, right? So um I realized that this I realized that this low here was the target liquidity for this whole bearish move, right? So how did I take my next trade when I realized this? When I realized this, I saw this move, but I didn't take this one. Didn't catch this one. I wasn't available to catch this one. So this one was like a breakout structure from me, shifting structure from here. And then we had a liquidity here. This went something. Okay, so this was like a shift in structure and liquidity, and then price is reacting off of this resistance. I mean, support become resistance from here. Price reacted off of this support become resistance, and after I saw this, right? After I saw this, I was on the 15-minute time frame. Now this was very trickish. On the 15-minute time frame, I saw this uptrend, upside, and I saw the shift in structure. And the liquidity printed, right? After seeing this, right, I wanted to sell from here or something, but then I realized that on the 5-minute time frame, price printed something really clean that I realized that no, price is going to use this one. Price gave me support become resistance. And also other block, people could call this their entry point, the other block. So when I saw this, I realized that, yeah, this is the one price would use. So I put my entry there and sold. And my target was what? To finish off the liquidity, clear out all liquidities. That was my target. Finish off liquidity. Sell down to this point. So I told you guys that I'm bearish on gold till all liquidities are out. I said it, and boom. After liquidities were cleared, so now target liquidity for this is completely out. So now if you shift down to the 4-hour, which is our macro time frame, you notice that we had this, we're having an uptrend, and this one here, then pull back here, and then high, then we make what? A low, right? So this is our range, this low to this high, and we have what? All liquidities inside here. It's finally out, and price has finally what? Tapped into a buy area, which is what? 4-hour level. That's also with the daily. So once you see this, you know that your target is to take out this high. At least first of all, this high is going out, right? Because price is in an uptrend, and price trending up, you know that this is the next target for the trend. So seeing this is my next target to trend. So seeing this, why did I take buys on this day? Why did I take buys on like yesterday? So seeing this, you know now that liquidities are out, bias has changed. This is my new target. This is the new what? Target liquidity is now here. Now here, here. Or you could say what? You're targeting all of this trend line. Liquidity is here. So this is same thing here. So for the entries, you look for exactly the same thing. Now you've used your macro time frame, you've seen the trend on the macro time frame, 4 hours. Now on the micro time frame, you want to look for what? Entry points. So on the 15-minute time frame, all I'm going to observe is what? Trend, right? Observe the trend in 15 minutes. On the 15-minute time frame, I could see this, what? This structure break, double break here, and also break here. So seeing this like this is a break structure. Okay, so we had what? Liquidity present inside of here. After my liquidity, what next? Closest level, this one. So first entry, take first buy here, first setup, right? Next setup comes from here. Down. Yes. Okay. We look down to lower time frame for entry points. Okay. Lower time frame for entry point. And on lower time frame, you can see you have this. Resistance break becomes support right there. Okay, so back on the 15. So you have resistance break becomes support. So what do? Take buy from here. Now, when you're buying from here, what's the target? All these buys you take here, what's your target? This high. I don't know if this is confusing to you guys. Are you understanding? Then you take the next one. Price can give you what? Another setup. Now, this entry here followed the model 3, the model 3. You can see that price broke structure, then printed this liquidity, then the level closest to that one, price used it to buy. And I was in this one, and this was my last entry, my most recent entry, which all two entries are going to be held for full target, which is what? To create a new high on the 4-hour time frame, on the 4-hour uptrend, to what? Create a higher high on 4-hour uptrend. That's the whole goal, everything. Yeah. So on the 15-minute, you have trends, you have price go from bullish to bearish and bullish to bearish. But on the 4-hour, you just have price trending up. And that's the beauty of higher time frames. You could have first entry here. So that high. So is it clear? Hello?
Yeah, all looks good from my end.
Everything is clear from your end.
Yeah, yeah.
Okay, no questions.
It's just to be able to identify the key area you take your entry from. I think that's just what I will need to work on.
The key area to take your entry home. Everything comes from where you look at as your break of structure, right? If you get the structure wrong, you've gotten everything else wrong.
Yeah.
If for someone who looks at this and you got your structure wrong, or let me say you look at this and you got your structure wrong, like you, after looking at this, you were taking this as your structure, you're like, okay, break of structure. Some people would say this is their break of structure, and they'll say this is their liquidity, right? If you do this, when price come back, then you've missed this entry because you got your structure wrong. So once you got the structure wrong, if you can mark the right structure points, if you mark the right accurate structure points, right? If you have the right structure point marked out, you would be able to see the right liquidity. And thus the level below your liquidity is exactly the level you are meant to use. And I've been explaining structure to you guys multiple times. Like it's literally very easy for you to do this. Very easy. Or if on this trade, let's say on this trade, the one I took entry here with this liquidity, the one where the entry was from here, some people might make the mistake of marking this as your break of structure, and this is your liquidity. And it's fine. I mean, if you are just being a beginner, it's okay to make this mistake sometimes. I used to make this mistake sometimes. And this is the reason why sometimes you might have missed entries and stop losses in some cases, right? But the first thing you should make sure you identify properly is your direction. Because if you don't, you end up taking what wrong setups that might just end up maybe price will like react from your zone and give you a break even, or just straight up give you a stop loss. So first of all, understand the liquidities and your direction first. I mean, understanding the higher time frame trend, then the target liquidities. If you understand the higher time frame trend, you should know what the range and the liquidities inside the range. You should know when those liquidities are out. So once they're out, you can know that yes, at this point, if price prints my setup, it's time for me to sell or it's time for me to buy, right? Because if price doesn't print out doesn't take out the liquidities, even if it prints the setup, it won't work. I gave you a very good example from here with this setup. Very good example with this setup. Or even if I should use the daily, if I should use the daily for my stuff. Okay, let me use the daily. Let me say now here this is the daily. Okay, so the daily taps here, made a high. Okay, taps here, we make a high. And I want to catch the higher low, right? So if I'm looking at this range from here to here, here to here, what I need to focus on, what? Look for my liquidity inside this range. If I can find the liquidities inside the range, I can be able to what? Know when to start buying. Right? If I don't find the right liquidities inside the range, I'll buy at the wrong time and price will still keep selling. So on the 4 hours, you can already see that the uptrend is forming. Price was forming the uptrend, so we're already having that forming here. Okay, on the 4 hour, you can already see that uptrend was starting to form. This so pull back, new high. So price what pulls back inside. So what are you expecting next? A new high again, trending up. So if this is this, then this is what the range. Inside here, this low to this high, there are liquidities inside here. You should focus on what? Spotting the liquidities. Once those liquidities are out, you could either what take a direct entry if you know the zone that would be used after the liquidities are out. You can take a direct entry, or if not, just wait for after the liquidities are out. Price should what start giving you your entry model, and you start buying. It's that simple with this strategy. It's that simple. And then when you start buying, you already know that your target should be what? For price to give you a new higher high. Right? So when I'm buying here, target is what? Let me get a new higher high to take out this one. So that is the whole thing. Do you understand?
Yeah, I do. I do.
Okay. So I think that's clear enough with liquidities. So tomorrow I'll be rounding up with liquidity and then we'll move on to something else. Hope it has been clear enough so far.
Yeah, for me, it does actually.
So for now, what's our target liquidity now? Target liquidity now is what? You see from this high, target liquidity is what? Oh, this trend, downside. Target price taking out liquidity being built on this trend. Why price was compressing to the downside, built liquidity. Price has to take out that liquidity now. So that's what you should be targeting, right? So that's what you should be targeting. So once price takes out all the liquidities, then we are good to go. Is it okay?
Yeah, it's fine. I think although I've been trying to focus a bit on GBP JPY, I think it has almost same structure like this. It has a target liquidity above, which
Yes, yes, yes.
price is moving towards.
Yes, once price you ought to keep buying until everything is out. So I would send out the recording. I think the session is about to be over. I'll send out the recording later. So those who couldn't attend the recording can watch this. Tomorrow is going to be the last liquidity class. Everyone should please attend so we can ask questions before we move on to something else. All right, so I'm going to send out the recording later.